Welcome everybody. I hope you are having a fantastic bank holiday weekend. We are going to have Traders Roundtable on Tuesday night, not bank holiday Monday. So let's all get away from the screens on Monday. There's no data to speak of. Let's see how the market's open on Tuesday, and then we'll get together on Tuesday at 7. In the meantime, I have been talking recently about watching out on the Chinese market. This is the Chinese A50 market on a weekly. So we've done a 1, 2, 3, 4, 5, and we've got a 1, 2, potentially wave 3 to take us back to the mean average, which in this case is about 11,900. Let's see if we can get up there, at which point, if we can break this resistance, of course, because we're really flat for 3 weeks in a row. That's the box we're in, very little box. So a peak out of that into 11.6. If it gets rejected, could see us rolling over if this is a bear flag. In the meantime, let's just watch out and see if we can close higher in the daily. The daily is more interesting. You can see this huge resistance line. Now we've had 1, 2, 3. This is the 4th touch. Now normally every time you touch a trend line and the market doesn't roll over, that means every time you touch the trend line it's weaker. So we could potentially break through here, and through, if we can just start closing above Friday's high. So that bodes well if we can close higher. If we start peaking up and selling, then we know that the market is not ripe for reversing that. The Dow, sorry, on the weekly we couldn't close above this February high. So I've got a channel here drawn very badly, so I'll redraw that. Taken from February 17 highs, running along the tops of October 17 and picking up the selling that we've got here in June this year. So broke down here in March. Should I put that trend line somewhere else to pinpoint the channel? I will go with it for now, as it's the best I've got. The crucial aspect is this 800, 825. If we poke into the high of the channel, then we're potentially looking at 26,000, and we're looking for a very good number on GDP this week. That's the only bit of data that's worthwhile this week. It's pretty quiet, nothing tomorrow. We've got US GDP on Wednesday, and we're expecting over 4%. Okay, so expecting a very good number. If we don't get that good number, then the market could roll. Now, we're all focused on interest rates in the US in September. There's a big bet on rates going up, which is not reflected in the dollar basket at the moment. So we've had 2 weeks of selling on this one. Let's see if we come down to that trend line support and hold, and then potentially close above that 95. If we immediately close this week above 95, then we could start heading up into these regions, continue to close under 95, and then we could roll over. What's my best guess? My best guess is we'll come and see 94 and then start to climb back up. But let's just focus on the markets. So you can see on this daily Dow, we need to close above last week's high, which is about 25,900 roughly. I can tell you exactly. 25,890. We need to close above this fib level 900, and then see if we can go and see 26,750. If we poke our heads above here and immediately close lower, we'll know to get short. So this is a really strong, potentially strong signal, three-way reversal. But if, like I said, if we close above 900 and hold 900, then we could punch higher into this big January sellers bar. Okay, so let's not get away from the fact that we are closing higher, we're holding up, and so let's just concentrate on waiting to see how the market handles 900 is the best way. In the meantime, let's look at the FTSE and the DAX. The FTSE actually held up just, but very unconvincing. Couldn't close above the weekly 8-day average, and the daily is under the cosh because we are under the 20 and 50-day average. So now, in my book, any test of 76.40, 76.50 is a short. And then I think we could start to come and see 73.70 and potentially lower. Of course, if the opposite happens and we close above that 50-day average, then expect that to go higher. DAX. Weekly held this trend line I've been talking about. I've got the low of February 16 and the low of March 18, and we dipped underneath it and immediately closed higher. So that's a bullet. In actual fact, we have had a new low in this range and a close above, so that's bullish. That's a buy signal on the weekly. So I'm looking for a push into 12,600 plus on this one. The daily, however, tells a different story. Any market that can't close above the 20-day average, to me, is very weak. And that's exactly what. So we've got a conflict in the information the weekly is giving us and the information the daily is giving us. You can see this divergence down here. She's not quite divergent because we didn't make a new low. Divergence, in my book, only really applies if you make a lower low and a higher low in these in the MACD. So any close above 450 could see us. I think the mean average in this one is 638. Now that fits very neatly with what I've just talked about on the weekly charts. This daily resistance is picking up a key level that the weekly has picked up. Surprise, surprise. Excuse me one moment. So let's see where we are on Tuesday. Like I said, I think since we've broken down here on the Friday 10th, we've got 516, which is the daily 50 EMA, and like I said, that's 600, 638 as resistance, but close underneath 350 anytime soon, and yes, this could roll over. Okay, so I'm looking for where this wants. I want this market to tell me what it wants to do, and the date, like I said, the daily is conflicting with the weekly. My instinct is going with the weekly, so I think a pullback to 350 could then carry us up to 630, and then we need to wait and see what the market wants to do at that point. Okay, so I'm short-term bullish, longer-term bearish, so medium-term bearish, and then longer-term looking for that Christmas rally back into this resistance at 12.9 plus, and then looking for a pullback in this Dow, and then a push into this year's highs at 26,620. All right, silver, I'm long silver, and very nice weekly chart. Not a convincing weekly chart, but nonetheless a higher close, so I'll go with it. Keep my stop under 1440 and then see if we can come up to 1550 plus. Gold is even better. That's closed above 1200, so a pullback to 1995 is a potential push higher. Oil, I think oil is going to struggle here, and oil, if oil can't close above 70, then it's in trouble and could roll over. So we're in a little apex here. Got decent support here at 66 and resistance at 69. So, but that's a very convincing weekly, I have to say. So if you're going by the weekly, you buy 66, a stop under last week's low, which is very close, 64.80. Give it some space. Ideally, you need to come under 64, which is not that big a stop, to see if we can break 70 and come back up to those highs. Okay, so short-term bullish, medium-term bearish, longer-term bullish, and then it's going to potentially get very, very interesting. Right, let's just have a quick look at the bonds before we go, because I think the bond market is important. So this bond market is holding up. This is the 5-year treasuries, the US treasuries. That's holding up, which is healthy. Let's look at the 10-year notes. That's holding up as well, but it's a flat yield. It's a curve, so which is potentially negative for the markets. Alright, so like I said, I'm not trading, not around on Monday. Room opens Tuesday morning, and then Traders Roundtable for Tuesday evening. And we're going to just talk about trading psychology, the aspects and the key issues and pointers around trading psychology. Thank you very much for joining me, and I look forward to seeing you on Tuesday. Bye for now.